The S&P 500 finally hit the big 6,500 level. This was the largest gamma exposure concentration. Going back for the last 2 or 3 weeks now, we've been highlighting this in a number of our YouTube videos, and we finally hit that level today. The market overall was up 0.32%. We are entering our upper dealer cluster zone above the 6,500 level, so it's possible if price continues a little bit higher that we could see some dealer selling pressure increasing as price goes above this level. So that is something to be aware of. This is potentially a consolidation zone or a potential area for pause. However, longer term, as we've been discussing, we can see gamma exposure continues to be skewed to the upside. Most of the gamma exposure is net positive, and you can just see that by each of these strikes where the green bar is larger than the red bar, and that's almost every single strike. So we're net positively skewed in terms of gamma exposure, and that basically just tells us that positioning in the options market is expecting an end of year rally into these higher gamma exposure concentrations. And the way we are approaching this is continuing to maintain hedges in our portfolios. Basically, if there is a rejection from these levels or any kind of temporary consolidation where we see price retrace back into the 6,300 to 6,400 range, anywhere down in here, and this is where our hedges will come into play. And so we are continuing to maintain our hedges. We're continuing to sell premium both to the upside and to the downside. So we're able to capture profits in various market scenarios. By the way, if you're interested in tracking our trades in real time, you can become a member at geeksoffinance.com, or you can check out our Discord community absolutely free. Links in the description to both of those so you guys can check it out when you get a chance.
Thanks, Anthony. Let's take a look at QQQ. Yesterday, we mentioned that with NVIDIA earnings and NVIDIA being down after hours, QQQ still had the setup for a move up toward 580, and possibly we would see some other names pick up the slack and take up leadership. That's exactly what we saw today. We saw NVIDIA actually make up its decline from yesterday, but it still took other stocks to lift the index today. We are above the whole moving average on the daily chart. That's still a buy signal that's in place. And we still have this major GEX at 580 sticking out as a solid target. That's less than 1% away at this point. So it really seems like that's due to be hit. But I wanted to compare and contrast that daily chart with the weekly chart on QQQ, which shows the whole moving average, which we've actually been below the whole or maybe right on the line going on 6 weeks, 7 weeks now. So the whole has still been rising, and that's allowed the QQQ to make a higher high 3 weeks ago, but we haven't really gone anywhere in a month. So let's keep an eye on what happens at 580. If we go above that, then we'll watch 583. But the air's getting thin in some ways, and we may be near a point where we could see yet another pullback, just like we did 2 weeks ago, maybe even deeper. So no need to speculate on that until we observe the price action and the GEX changes at the 580 area.
Thanks, Sean. Let's take a look at GLD, the gold ETF, up 0.74% today, closing at the big 315 strike, 315.03. We've been highlighting the gamma exposure at 315 going back a couple of months now. We keep bumping up against it. Most recently, we've come off of the 50-day EMA and have rallied the last 5 straight trading sessions to close right here at this 315 strike. The move today was a big one for our portfolio. If you've been watching our YouTube videos over the course of the last week, you know that we sold the August 29th 315 puts recently. We just closed those out today for $1.24. That ultimately ended up in $2,610 profit on those short August 29th GLD 315 puts. We went ahead and kept the same strike rolling out to the September 5th expiration. This is part of our GLD weekly income strategy. We've been running this for about 4 months now, averaging just under $1,000 a week. And a big factor in our success is the analysis provided by our gamma exposure data. We're able to see where market participants are focusing in the options market and positioning for these larger moves. So the 315 and the 320 strike are obviously large targets. This is suggesting that this resistance that we've seen build up around the 317 level is likely to break in the coming months. And in fact, when we look up to the volume data today in the options market, we actually actually see there was some big volume at the 330 strike and the 350 strike. So participants are coming in at higher and higher strikes. Over 80,000 contracts was traded at each of these higher strikes. So there's a lot of speculation that a big breakout is coming into year end, and we're starting to see gamma exposure growing at some of these higher strikes as well. So this is the kind of data that we look for and incorporate into our analysis, and it informs a lot of these trading strategies that we have on in our portfolios.
Let's check in with the VIX today and see if it still has a pulse at all. I have the daily chart pulled up on TradingView, and you can see we actually have a possible indecision or reversal candle today with the VIX closing at 14.44. Zooming into the 2-hour chart, which I like to use for tactical entry and exit if I'm looking to go long or short the VIX, you can see that the 2-hour chart's retaken the whole moving average, which is a buy signal in my book. And we have some room up to about the 1575 area. That upper Keltner channel is right at 1575 actually. And if we zoom out even further, we look at the weekly chart now, and we also look at the GEX picture. You know, we have a lot of negative GEX between the 13.5 now and 15 area. And we're below the weekly whole moving average. The 9-period SMA at 1609 may end up being a ceiling, or at least a point where the VIX is going to have to contend with this resistance at this point. So it is worth noting, unless we're moving back to a regime like we saw in May of last year through July, where we were in the 12 to 13 area, and we only briefly touched that again thereafter. It's a tough spot to be looking for the VIX to drop further, in my opinion. We have volume way up here at 25, and this could be participants simply hedging their long positions, but the fact that they're doing it while the VIX is low, may be indicative that it's time to be a little bit more cautious.
Thanks, Sean. Next, let's take a look at Google, up 2.01% today, closing at 211.64. We traded Google just this past week, locking in a big gain in both of our portfolios. We were hoping to see a little bit of a pullback so we could re-enter, because gamma exposure is still looking strong from the 210 to 220 strike. So far, we have not gotten that pullback, especially with the big up move today. So we're now above the largest gamma exposure concentration at the 210 strike. We're continuing to see volume coming in at the 215 and the 220 strike. So this is translating into gamma exposure growing at these higher strikes. What we think is going to happen is potentially some consolidation. Maybe we'll have an opportunity for a pullback into this rising 50-day EMA over the next week. That would be the ideal situation, a move back down into the 205 level approximately. And if we do get that, we will look to enter into a long bias position, most likely an out-of-the-money call debit spread targeting the 210 to 220 strikes. Google's in a strong uptrend, and volume in the options market continues pointing to higher prices. So this is a name that's going to remain at the top of our watch list. We're just looking for a pullback so that we can enter with a better risk-reward profile.
Anthony, as we're heading into the last trading day of August tomorrow, end of the month, and the weekly option expiration, we'll have an eye out for the Wall Street window dressers looking to bid stocks up right at the end of the month. And Netflix showed up on my radar. We had a huge volume at 1250. We have positive GEX and a fairly positive technical picture from my view. It's been consolidating for the better part of the second half of the month. It's done well, though, in the first half of August. So, this may be one of those window dressing candidates. And we're above the whole moving average on the daily chart. There's GEX accompanying that volume we see at 1250. And I notice on our 3D graph that 1250 is almost equal with 1230 as the biggest GEX clusters expiring tomorrow. So very good shot based on the GEX picture for Netflix to catch a bid tomorrow. And beyond that, I really think 1300 has a good shot at being hit. 1318 is the upper Keltner channel. So Netflix is one to keep an eye on, and I'll be interested to see how it opens tomorrow, and of course how we end up closing the week.
And for a limited time, you can get $300 off our yearly portfolio manager tier subscription. Use code SUMMER2025 at checkout. We do have a few spots remaining, but this promotion will be ending soon, so definitely take advantage of it while you can. Members get access to our gamma exposure dashboard, our option flow analytics tools, as well as our algorithmic trading strategies, and you'll also get access to the premium channels in our community Discord. We've got a ton of great traders in there sharing their own trade ideas and strategies, and you can also track our trades in real time as we manage our options portfolio. Links in the description below to all of that. Thanks so much everybody for watching. We'll see you guys in the next video.